And we have the rand trading around 7.30 at the moment. Of course, yesterday going down to 7.27. So a bit of weakness since then, but still a good side, better than it was at the beginning of the week.
Absolutely, Stephen. Look, I think the rand is largely range-bound at this stage of the game, between that 7.20 up to 7.40 level. That's kind of where we're at the moment. Taking a lot of cue from what's happening to kind of the euro-dollar. We've got some domestic concerns, i.e. the strike activity. We've also got some interesting developments on the inflation front. But I think the rand is by and large ignoring those and really focusing on these global growth concerns.
Well, perhaps looking at the inflation picture, we had PPI numbers out yesterday, 7.7% growth for July. So that was down from about 9.5% in June and much better than the market was expecting. And it looks like this is just adding to the pressure for another rate cut.
Absolutely. I think it's going to be hard for the Reserve Bank not to cut interest rates at the next MPC meeting. Of course, the one thing that we've got to be wary of is these wages. Also, food prices are starting to tick higher, and that's why Standard Bank, we still believe that rates will be left on hold. But absolutely, the soft GDP number, the soft inflation prints this week all point towards a high probability of an interest rate cut at the next meeting.
And of course, we had the Finance Minister Pravin Gordhan speaking yesterday, talking about some of the PPI and growth numbers we've seen out this week. And he appears to be quite dovish for a rate cut himself.
Absolutely. And what was interesting is as well is that he mentioned those statements along with mentioning the fact that the Treasury has been accumulating reserves. And I think we've got to sort of contextualize that, because obviously if they do cut interest rates at the September meeting, it is going to make it cheaper for the authorities to actually sterilize any reserves that they do accumulate. So I think if the Treasury intends to continue accumulating reserves together with the Reserve Bank, then there's even a stronger chance that they will cut interest rates together with that benign kind of inflation backdrop.
And of course, with inflation coming down as it has, the real interest rate has been increasing over the past couple of months.
Well, absolutely. So, I mean, for investors domestically and abroad, our yields are offering some pretty attractive levels. It looks like, of course, global growth is under pressure, and that international rates are going to remain subdued for some time. So if you fund in any kind of bond purchases or any kind of carry trade from the States, Japan, or any of those countries, you're still earning a pretty nice pickup. And with those real interest rates increasing, as you mentioned, there's it's signaling that there's a very unlikely chance that they're going to start hiking rates in South Africa anytime soon either.
Well, we had some jobless claims numbers out of the United States last night. Claims fell 31,000 to 473,000 last week. Better than expected, but still not great.
Not great, Stephen, and I think now the focus shifts towards this morning, should I say this afternoon's GDP figures out of the States. We've got a bit of UK GDP this morning, but those GDP figures, we are expecting a massive downward revision. We're expecting Bernanke to take to the podium this morning, and he will probably also deliver another downbeat assessment of the US economy. So I think those jobless claims data, better than expected, but there's been a tide of poor data coming out of the States. That's why the dollar has been under pressure. That's why the rand has been sort of remaining fairly firm despite domestic concerns. And we're probably going to get more bad news out of the States today from those GDP numbers and from Bernanke's remarks.